Hi guys, alright, in today's video we're going to switch things up a little bit. So we're going to move away from the chart and I'm going to give you my 10 rules of engagement, looking at trading, investing and generally being successful and the rules behind that. So I'm hoping everyone will find something useful out of this video. I've very much been prompted by my own mentor and role model, Anton Creel, so shout out to him. I'll mention his name later on today. We know his 10 secrets video really went viral a couple of years ago, and he did make a follow-up to that. So hopefully you guys will find this video interesting. It's a little bit different to what I would usually do, very much off the cuff. I've got 10 slides here, 10 sort of rules which I follow. So in my day-to-day life and in trading and investing. So I'm hoping you guys will get something out of this, very much off the cuff. I could spend 2 hours on each one of these slides, frankly. So I've just done it very much off the cuff. Obviously, if you want a more detailed presentation for this, I'm sure I can get something together in the next couple of weeks or so. But let's see how it goes. Let me know your feedback. So let's go into it. So I think the first rule really is to be curious and to be have I spelled that right? Yeah, I think I have. And it's just to question everything. I think this really has to be rule number one. You need to be looking deeper into things. Okay, so when the news, ABC Corporation, whatever, XYZ Corporation says something about a stock, something about a coin, you have to be questioning it in a little bit more of a deeper perspective. Okay, and things aren't necessarily what you think they are. Okay, and there are unfortunately, without mentioning companies or going into things too much, there's agendas behind the scene. Okay, and that's not a conspiracy theory or anything else, that's just the truth of the matter. Okay, so generally 99% of people succeed, lose, and 1% of people win. And for that percentage to be so exponentially weighted in one particular direction, it must be the case that many people are getting led down the wrong path. Okay, and I think propaganda, news, you can break it down even more, sort of internet, social media, cinema, very much is there to deceive, and perception becomes reality. Okay, if you tell a lie long enough, people are going to believe it. So and we all know who said that. You can Google if you don't. So I think the first rule that I have is just to question everything. Okay, and that is, the earlier you start doing that, the better. So I don't know how old people are who are listening to this, but I've got a vague idea. Probably millennials, probably anywhere from the age of 18 to 38. So you really need to start questioning everything, I think. And I think the markets and the way that they are, I mean, the professionals are there to take your money. The markets are there and they are designed to take the money from your pocket into their pocket. That's what they're there to do. It's there to facilitate trade between buyers and sellers, but ultimately that's their agenda. Okay, and they have connections with the media, so you have to understand the game is actually rigged so much in one favor that if you don't understand what's really going on underneath, it's very hard to succeed with that kind of environment. But that goes on a lot more than just traditional markets. I mean, you can look at the news and everything else. So you really need to be curious, I think, and start questioning everything. Start looking more deeper into things. So number 2 is role models. So from inception, we're obviously going to have role models, which will be older siblings, parents, teachers and whatnot. Okay, and not everyone has grown up, unfortunately, with the same role models or with the same education. But after the age of 18, when you're out in the world all by yourself, you need to be able to seek those role models. And I think social media can be used for a good thing, but it can also be a terrible thing. So it's very easy to follow the wrong role models on social media, famous pop stars, rock stars, whatever. But when it comes to if you know what you're looking for and you have a bit of intelligence and you look deeper into things, it's very clear that you can find the people who know what they're talking about. Okay, my own role model mentor is Anton Creel and Ray Dalio. So in terms of trading and investing in those particular principles, there are none better. Obviously, if you venture into business, you could say Richard Branson, Warren Buffett to a small extent, maybe Jeff Bezos, but specifically for trading and investing, it's got to be these two. And I think you guys should really watch every YouTube video that they've done. There's a great one with Ray Dalio and Tony Robbins. Just pop onto YouTube, type in Ray Dalio, Tony Robbins. They talk for about 2 hours, and I think it's a great video. And Ray Dalio's obviously written the book Principles, which I think is a great book. And Anton Kreol, if you've not moved over to his YouTube channel, it's Institute of Trading. Have a good look. Some of his earlier videos are really, really very good. Okay, and they are completely free of charge. So I would have a look at those two. But as I said, really, generally in life, you need good role models. Okay, and you want to emulate them, and you want to eventually better them. Okay, so, and that is not disrespectful, that's very respectful, because you're emulating them to the extent where eventually you want to succeed even what they've done. Okay, but you need really good role models, and you need to keep remembering yourself as to what you're doing, because it's very easy in today's day and world to get distracted by X, Y, and Z. So you need to always stay focused. But without high aspirations, without good role models, you're never going to succeed in any walk of life. Okay, if someone wants to become a brilliant footballer, they're not going to have pictures of Peter Crouch on their bedroom wall, are they? So you get the point. You get the point. So that would be rule number 2. Number 3 is basically everything I teach. So Fibonacci, Elliott, and volume analysis. I get really concerned when I see anyone analyzing any chart without volume. Okay, volume is really the driver behind price action. Okay, without volume, there would literally not be a stock market. Okay, and likewise, I get very concerned when people are projecting really high well into the future price targets without Fibonacci and Elliott wave. And really, you need to use all 3 of them to get a good grip off the stock market and any asset class. Okay, volume I still feel is the most important, even though in all of my videos you see Fibonacci and Elliott wave. Don't be too fooled by that. I still put a high emphasis on volume, but really when used together, they are very, very powerful. Okay, the car auction analogy is simply to make everyone understand the stock market is simply a medium of exchange to bring together buyers and sellers. Okay, so let's say you've got a Ferrari that you want to sell. It's a one-off, it was in a James Bond film or something. Let's say it's a 1975 275 GTB 4CAM, and you're the only one who owns it, and let's say there are 10 buyers for that. Well, supply and demand, isn't it? So if there's one supply and 10 people demanding for it, you can imagine there's going to be a bidding war. So bidder number 1 comes in with 500,000, but you're not going to sell at that price, are you? Because there's 9 other people after him, and bidder number 2 comes in, he bids 550. Next thing you know, gathers some hysteria. Maybe it's over the news that this Ferrari's on for sale. Next thing you know, there's a massive bidding war. Okay, and the price of the value of the asset obviously goes up, and then eventually it hits your target of 1 million. Perhaps even it will go higher than that. Okay, and that's all the market is. It's simply a medium of exchange. Okay, so the car auction analogy is a really good way of just showing it. Okay, when you look at your stocks iPhone app, literally the price that you see is the last time that a buyer and a seller transacted for that particular stock. Okay, and likewise it would work in a down trending market. Okay, let's say there are 10 of these Ferraris available and there's only 2 people wanting to buy. Well, you're going to really lowball your bids if you're the buyer, because there's really high supply. Okay, and let's say we're going into a recession, classic cars aren't doing so well, maybe there's some negative media headlines. You can see how these Ferrari owners are going to suddenly want to lower their offer price for that car if they want to get rid of it. So £1 million car could easily start really depreciating in price, and in that particular situation, the buyers are in control. So with this whole Facebook thing, like it's gone down to 171, well, the sellers are in control, but at the same time, the buyers don't need to jump in right now. The buyers could easily wait for a much lower price. Okay, so always think of the stock market like that. And then the final point there, empty the clip. So By that I mean the conviction. Okay, so you can do all the fancy analysis that you want. You can have Ichimoku clouds, moving averages, even everything I teach. But if you're not willing to have the conviction to press buy, to buy the stock or to sell short, well, it was a complete waste of time. So, okay, so you need to have the conviction to follow through with your trade. Okay, that's very much a poker term, that. So this would be the fourth rule, is a strong work ethic. Okay, this is very important. Okay, so you need to be determined, you need to be motivated. Okay, and there's talent versus skill. So talent is what you have naturally, and skill is what you have working hard at your craft. Okay, what disappoints me the most looking at people generally is wasted talent. Okay, so people like Wayne Rooney, who I regard as the single greatest young English football player of all time, it's very unfortunate how his career has turned out. Whilst he will still be regarded as a great player, I'm sure he'll never be regarded as a world-class, one of the greatest of all time, even though I feel talent-wise he had great talent, but he didn't take care of himself. Okay, and skill is what really separates the wheat from the chaff. Okay, and you could get someone with great talent who doesn't really work hard, and he'll never probably get as far as someone who's not as talented but works really hard. And in my experience, speaking to people who are at the top of major corporations, actually, honestly, they're not that talented, but they work really hard and they're very determined. Okay, and I think that's just something to just take of note, that and everyone has talent, you just don't know it. So you need to push yourself beyond the presumed limits that you've been conditioned to, and that conditioning could come from childhood, from upbringing, from education. How do you know what your limits are until you've pushed way past them? Okay, so it's like going to the gym. If you only think you're going to bench a certain amount, how do you know you can't bench higher than that? How do you know you can't run 100 meters in less than, 12 seconds or so? So you need to really push yourself beyond your limits. Okay, but never forget that talent and skill. And I would encourage anyone to have a look into Will Smith videos on talent and skill, and I think it's very powerful. One of my role models outside of investing and trading. But overall, yes, definitely work ethic is what you need, and you're never going to get anywhere without a strong work ethic, regardless of how much talent you have. As for finding that talent, well, you need to push yourself beyond your presumed limits to find that talent. Everyone has it, you just don't know it yet. But wasted talent for me is the biggest failing of humankind, I think. Okay, so 99% of people are losers, in the sense that not just financially, but 99% of people in any profession, in any walk of life, will generally have an outcome that is of mediocre results. Okay, and the 1% will have an outcome which is far higher than that. Okay, so it's probably exponential. Okay, so 99% of the village are thinking a certain way, doing something a certain way. You can believe that the 1% who's thinking the opposite, if he makes the right call, that is, obviously his returns are going to be exponential. Okay, and that's what we look for in trading, in investing. We want to be doing the opposite of the herd. Unfortunately, 99% are the dumb money, they are the herd, they are the sheep, and they generally make the wrong calls, like those who bought the tech stocks recently or bought Bitcoin at 20k. You want to be always thinking the opposite. So I think that's really the major point from this particular slide. It's just try to think the opposite. Generally 99% of people are wrong. Okay, so the next slide, this would be point number 6, so is risk. So obviously we're looking for asymmetric returns in our investments and our trading. What we want ideally is an infinite number of low risk, high reward opportunities. Risk is subjective to your own personal circumstances. Okay, so someone buying £1,000 of Digibyte right now, who has an account size of £1,000, is very much different to someone who is buying £1,000 of Digibyte who's got an account size of 100k. Two completely different things. And you can see how in the first the first guy, if he doesn't make the right call on did you buy it at that time, you can see how that's going to lead him towards a lot of problems. Okay, so we need to have good risk management in everything that we do. Essentially, trading and investing is a game of probabilities, and you need to account for variance. Okay, there's so much variance in the markets that you need to have as many try to how can I explain this the best way? Variance. Try to account for every possible eventuality. So if you're looking at an Elliott wave count, for example, we know many of these counts, especially on crypto, they can suddenly change. So you need to know at what price are you wrong for that particular count, and if it does hit that price and you are wrong, well, what does that trigger? Then triggers a different way of looking at the count, and so it brings in a whole new of different possibilities. Okay, and Elliott wave is really good for that. So I think account for variance is more the fact that you need to be constantly looking out for every possible eventuality. Okay, and if you're looking at volume, horizontal support, you've got a bit of RSI, Fibonacci, Elliott, well, you've analyzed the market to the max. You've accounted for every possible thing in that market that could happen, so nothing should surprise you. Okay, if you assume you're wrong at all times, then nothing is ever going to hurt you, is it? Okay, as Ray Dalio once said, just worry. If you don't worry, then you need to worry, and if you worry, you don't need to worry. Okay, so it's a great way for looking at things, I think. Okay, the 7th slide is opportunistic. This is so key. Okay, so opportunistic, those who bought Bitcoin five years ago. Okay, so you've got to be opportunistic in markets and investments. Okay, in the markets, we know 70% of the trades are run by HFTs. Okay, so if you don't get in at the right time, or you don't get a good order filled, well, the price is going to move very, very fast away from you. Okay, so you got to be scoping out like a sniper the opportunities that arise, and then you got to jump on them. Okay, once again, you've got to have the conviction to follow through. But opportunistic is really taking advantage of circumstances as best as you can. Okay, so a good way around that is to always have maybe cash on side to be liquid in some way, shape or form at all times, to take advantage of opportunities when you see them. Okay, the wealthy understand that, and they are very, very liquid, and they can take advantage of that, because you never know when an opportunity is going to arise, and by definition, almost an opportunity is something that everyone's going to want to jump on as soon as possible. Thus, it doesn't remain an opportunity for too long. Okay, so once again, this sort of incorporates a lot of the other previous slides, but if you're incorporating good risk management, you're always liquid, you're not maxing out your account size, you understand risk management, you can be opportunistic. Okay, but this is very, very key, because opportunities, however which way they fall, it doesn't have to be trading or investing, could be in business, could be in relationships, whatever. You need to be able to jump on it as soon as possible before someone else does. Okay, so very, very, very key. Just remember that one. So Confucius once said, strength of character is not in never falling but rising every time you fall. Okay, so all the great people have fallen. Okay, Ray Dalio, literally his Bridgewater associates nearly went bankrupt in 1980. I think it was 1975 or something, when Nixon came off the gold standard, because he thought gold was gonna absolutely tank, because it had come off the gold standard, and in the end gold actually popped and had one of his biggest moves of all time. Everyone in his company left, and he was almost alone then, and since then he's grown Bridgewater to the biggest investment fund of all time, and has returned more to investors than anyone else. Okay, and he calls it going into the abyss. So when you go into the abyss, there's only two ways out. One is you remain in the abyss, i.e. you're not coming out, you leave trading and investing is too much for you. And the second way is you actually make your way, Christian Bale style, in The Dark Knight Rises, you make your way out of the abyss. And the point being is that You learn much more from your failures than your successes if you learn from them. Okay, you can fail once, but if you continually make the same failure again and again, and you're not learning from it, i.e. you're not documenting it, you're not doing significant event analysis on what exactly happened, well, then you're just foolish. Okay, so it's going into the abyss. Either you remain in the abyss, you leave this game altogether, or you climb out of the abyss, and that will only make you stronger. Okay, go through every successful person over the last 20-30 years. Every one of them have had some sort of failing. Okay, so it's par for the course. A great lad on my yearbook back in high school once said, failure is a gift. If you don't fail, you don't learn. So it's par for the course. So get used to it. But the most important thing is learning from it, documenting it, constantly going over why it happened, how it happened, and how, more importantly, what's your action plan moving forward. Okay, but very, very key point. So don't be afraid to fail. Okay, everything has happened before, literally everything. Okay, the best predictor of the future is the past. So you need to be a student of history, specifically and especially in the markets. Okay, so we're in 2018 here. The markets have been around since 1779, I believe, was the first print on the Dow. So you've got 250 years or so of stock market history to analyze. Okay, and it doesn't take too long when you've got the internet platforms that we have now. You've got YouTube, there's so many articles you can find, and you can go over every single recessionary boom that drop that we've had, and every cyclical boom, and you can study everything that's happened. Everything has happened before, even the way that the economy is now and the way it will be within the next couple of years. Even that kind of thing has actually happened before. So, student of history, you need to be willing to take some time out of your life to actually study these things. So either you get out the textbooks and you read throughout history, or you just search Google and start as early as you can. Start from the early and the late 18th century and then move forward and try to study exactly what's happened. Okay, but the best predictor of the future is the past, and you need to understand that. But most people are too lazy to do this, but it's very, very powerful when you do. And it won't take too long to try to understand where we are in the economic cycle right now in 2018 and what that means for the next 1 year, 2 year, 5 years, 10 years. Okay, it's not that hard to predict what's going to happen if you understand what's happened before. Okay, and the last one is just giving back. So, this is something which I enjoy. I think it's very fulfilling. You can give back in so many ways. You give back to your community, but it's more than just giving back to your own family or people around you. It's about giving back to everyone else. So through YouTube platforms, you can write a book, you can make a website. I think everyone has got great talent, has got great skill, and everyone should be giving back as early as possible, because you never know what tomorrow is going to bring. Okay, too many people, I feel, honestly, they talk nonsense and they say, I'm gonna do XYZ in 5 years, XYZ in 10 years. Well, just do it now, because you don't know what tomorrow is going to bring. So you may as well make the most out of the time that you have now. Okay, you can't you can't change the past, can you? So you can only live in the present, and you don't know what tomorrow is going to bring. So try to give back at the earliest opportunity whenever you can, and that's the greatest thing that anyone can do. So let's just go back through all of them. So number 1, question everything. Number 2, have good role models, or seek out the role models, and those are the only 2 I have when it comes to trading and investing. Obviously, I've got many role models outside of that genre, but specifically for the game that we're in, it's those 2. So I would read, listen, whatever, watch every single thing that they've ever done. These 2 are great, and I think YouTube is a great platform for that. The markets, understand, it's just like a car auction. You need the conviction, and you need to understand Fibonacci, Elliott, and volume. Without those 3 working together, you're never going to get a good grip of the markets. Okay, because those 3 working in tandem help to confirm each other. Okay, obviously we've got secondary indicators like RSI, MACD, whatever, but the primary tools have to be these 3. Have a strong work ethic, understand talent versus skill, and push yourself beyond whatever limits you've been told you have or you've been conditioned to. Okay, you'll be surprised what the mind and body can do under stress. You'd be very surprised. Think the opposite of 99% of the people in the village. Have good risk management. It's very subjective, and account for variance and every probability, so nothing can hurt you. So a 20% correction in the Dow, 90% correction, crypto, whatever, Bitcoin going to 2,500. Account for every possible eventuality, so nothing can help you. And assume you're wrong all the time, and probably nothing will affect you. And worry. If you don't worry, you need to worry, and if you worry, you don't need to worry. Powerful. Very, very important. Be opportunistic. Remain as liquid as you can. Take advantage of opportunities when they arise. And very, very important. Failure is par for the course. It's all part of it. But you need to learn from it. You can't just make the same mistake again and again, because then it just becomes a foolish sort of endeavor. Everything has happened before. The best predictor of the future is the past. Okay, so become a student of history. Take some time to study what's happened in the past, and then you'll get a clear understanding of the future. Okay, and it's like looking at a glass with murky water inside, and that suddenly becomes nice crystal clear water. Okay, it's going from translucency to transparency, and then finally to give back whenever you can. Okay, so hope you guys enjoyed that. A little bit different, as I said, very much off the cuff. I could go on for days and days on each one of those slides, and I'm sure I'll do a more detailed video at some point, maybe more of like an hour long presentation on each of these slides. But I thought I'll just get that out there. Good luck if you're holding crypto and whatever, and I'm sure I'll get a crypto update and a Nasdaq update at some point. So I'll leave it there, and I'll chat to you guys soon. Good luck.